Hello, everyone. Welcome to today's webinar, and thank you for joining us. My name is Corey McCluskey. I am the president of NABOR and the chairman of the Media Relations Committee. I have the honor of hosting the release of the 2020 year-end Naples area real estate market statistics. I'm very pleased to report that we have positive news to share with you today regarding the emerging trends in the real estate based upon the Southwest Florida MLS statistics compiled from 2020 activity. The panelists who will be presenting the market statistics and trends today are Mike Hughes, who will be presenting pending sales. Thank you, Mike. Adam Rood, who will be presenting closed sales. Good morning, Adam. Budge Husky, who will be presenting closed prices. And Jeff Jones will be presenting inventory and days on market. Morning, Jeff.
Morning.
If you have any questions during today's webinar, feel free to type it in the Q&A box. We'll try to address some of your questions during the course of this webinar. It's now my pleasure to begin today's presentation of the 2020 year-end Naples area real estate market statistics and trends. We will begin with a presentation regarding pending sales. So Mike, take it away.
Okay, thank you, Corey. I appreciate it. You know, I'm reminded of talk I had years ago with John R. Wood back in 2005. And at that time, we were going through a heightened level of sales. Inventory was declining. I remember asking Mr. Wood, I said, have you ever seen anything like this? And he said, Mike, and he thought for a second, he goes, honestly, we're on uncharted waters. And I thought that was a great description. In other words, he had never seen that kind of market as we experienced in 2005. And he'd been in the business for 30 or 40 years, I'm guessing. And I kind of feel a little bit like the same thing in 2020 and probably 2021, in that we are somewhat on uncharted waters. And to talk about pending sales, and I'll get to the slides in a little bit, but let's look at the year overall with respect to pending sales. When we started off in January and February, we were off to a great start. In January and February of 2020, we had roughly 2,900 pending sales. And the year before, we had roughly 2,100. So we had a big jump on the previous year. And so, some of the brokers were talking about how it was looking at the end of February like this might be one of the best years ever for sales. And then mid-March, we saw the pandemic start creeping into our numbers. And really, the first half of March was very strong. In the second half, we saw a dramatic turn. And if you looked at the pending sales in March, they were down 38% over what we did the year before in March. So a 38% drop in March. And then we got into April and we had a 54% drop in April. So the two best months of the year historically were two very rough months for us. And it's hard to make up that kind of decline over the balance of the year because a lot of our business is done from Christmas to Easter. And so let's go back into April and look at the variables that we had. We had declining sales. We had, it was very hard to find any of the things you need to protect yourself, like masks and gloves, and all the supplies were wiped out. The hotel occupancy rate was down to 8%. So it was hard to be optimistic, to be honest. I mean, a lot of us were starting to make plans for the rest of the year. And, but it was pretty much across the board, there wasn't a lot of optimism there for good reason. But then something happened that I did not expect, and that is May came along. And after two straight tough months, the May numbers, pending sales, were almost the same as the previous May. And that was a huge sign, because then you looked at, well, the sky isn't falling. This thing is starting to turn. And so there was some cautious optimism that maybe the balance of the year might not be what we thought when we were looking at it in April. And so as we got into June, we hit an incredible run from June through December. Every month we did at least 1,400 pending sales, 1,400 a month, which is absolutely incredible. So this is a run, particularly in the second half of the year. Like, I've been doing this 21 years. I've never seen it. And so the words that Mr. Wood used, uncharted waters, really did resonate. And I think about that often. Pending sales, just a wonderful turnaround. It spoke to the resilience of our industry. It spoke to the resilience of the realtors that work in our area and in our market in general. I think what really happened is, particularly in the early days of May, June, and July, we became better at marketing our properties. To be honest, you had people using FaceTime to walk through properties. You had the virtual tours. You had people really focusing on how to do business in a pandemic, and it worked out wonderfully. If you look at the first half of the year, these are two interesting numbers. From January to the end of June, we had 7,104 pending sales in the first half of the year, 7,104. In the second half of the year, we had 9,150. Now, to do a couple thousand more deals in the second half of the year, frankly, is unheard of. I mean, I just have never seen it. And so just an incredible turnaround. And it's really a success story. And, it all starts with pending sales. You're not going to have closings if it doesn't start. Well, it actually starts with showings, and then pending sales, and then it morphs into closings. But let's take a look at some of these slides here. The first slide we have December to December, incredible difference here. You had 814 pending sales in December of 2019 overall, and 1,535 this December 2020, which is an 89% increase in pending sales overall. Now, why that is important is I always look at December as a month that gives us a sign of what we're going to be looking at the start of the coming year. And so when you see an 89% jump in pending sales, it certainly didn't stop December 31st. And when we release the January numbers, I think you're going to see some very interesting numbers, but we're not here to talk about that today. So all in all, pending sales overall were up 89%. Single family was up 84%. You can see the numbers there. And condos were up 94%. So across the board, a lot of sales. So that's great news. Cheyenne, let's move on to the next slide. Okay, now we have the fourth quarter. And I like looking at quarterly numbers as well, because it does show momentum. And if you look at it overall, we had 2,818 pending sales in the fourth quarter of 2019 and 4,709 in the fourth quarter of 2020. So that is a 68% increase in pending sales overall. And the breakdown, single family was up 60% and condos were up 75%. So all in all, a quarter that typically is not usually that strong a quarter when you compare it to the first quarter of the year or the second quarter, but actually the fourth quarter of the year was a real shining star. So all those pendings, is a good sign that a lot of closings are coming up. All right, let's move on to the next slide. Okay, now we've got the year, and what you're going to see for the year is you see the 12,623 back in 19, and then the 16,254 in 2020. That's a 28.8% increase in pending sales, 28.8%. But I don't think that really tells the full story, because keep in mind, back in March and April, we dug a huge hole. I mean, really, I think a lot of us would have been happy doing the same numbers as the year before. And yet when we finished the year, we were up 28.8%. So just an amazing recovery. It's a testament to the NABOR members. They were very busy over the second half of the year, but it also shows you the demand. The demand has been very strong. Now, why is that demand so strong? Combination of factors, to be honest. I mean, you have the low density of Southwest Florida. That's very appealing compared to high density areas. So particularly in a pandemic, I think that low density was significant. You had the turmoil in the Northeast cities, and that was chasing a lot of buyers down our way. So that was very helpful, but you also had low financing. Now, we have a lot of cash buyers in Southwest Florida, but the low financing is certainly a factor. And so you had a number of things coming together to create this, and also those lost sales back in March and April. A lot of those buyers that would have bought in March and April did not go away. They just delayed their decisions, and they did come back in the second half of the year. One of the things that struck me for the year was how well the high-end market did over the second half. Normally, I find the high-end buyers are a little more seasonal. In other words, we get more high-end deals in January, February, March, and April. But in the second half of the year, those high-end buyers came into Southwest Florida in a big way. I think the one issue that jumps out, well, there's a number of things that jump out at me, but one thing that seems to jump out at me is that most of these pending sales are closing right now. Now, there have been some years where you've had people walking away from contracts and that kind of thing. Not seeing a lot of that. In fact, in a multiple offer environment, which certainly we're in right now, most of these pending sales are closing. So, all in all, a phenomenal year for pending sales. Overall, the single family pending sales were up 35.6%. And the condos were up 27.3%. So lots of good news in the pending sales area. If it's priced right, it's highly likely it's going to sell, and it'll probably sell relatively quickly with the kind of market we have right now. So with all that great news and pending sales, Adam, I'm going to kind of turn it back to Corey, but you're going to talk about closings. So Corey, I'll turn it back to you.
Thank you, Mike. Such great information. For those attendees that might have questions, feel free to type that in the Q&A box, and we'll try to address those at the end, time permitting. Thank you so much, Mike, for that great information. The next presentation is closed sales with Adam Rood. So Adam, take it away.
Good morning, everybody. Adam Rood. I get the pleasure to talking about closed sales for 2020. And thanks, Mike, for the recap on pending sales. As you said, the pending sales really give a pretty accurate snapshot as to what's going to be coming up in the closed section of our market. And fortunately, we have a lot of strong numbers to report. But before I go any further, it's hard not to acknowledge what a year 2020 has been. Little did we think back in March, it felt like the world was just closing in on us, life stopping in our tracks. Not sure where things were going, in the midst of, economic shutdowns, a global pandemic, economic and political uncertainty. And yet we've kind of not only thrived in the midst of all this Goliath-like challenges, but we've kind of emerged the catalyst and backbone of what's been mostly an uncertain economy. So just hard not to feel grateful and blessed on that note to do what we do, where we do here in Southwest Florida. So on that note, let's talk about the closed sales. The numbers here, we have the 12,300 that closed for 2020, which does reflect a 19.4% increase. If you actually pull the data, I think it's actually bumped up a little bit, but regardless, very strong. The single family sector definitely outperformed the condominium market. And we'll look at another slide that will kind of depict how that took place at the start of this pandemic and through the rest of the year. Single family homes was about 22%, whereas condos was about 16%. So definitely had the edge there, I would say. One thing I wanted to note too, the closed volume was pretty remarkable. So we had just about a 20% increase in transactions. If you actually look at the closed volumes, we were up about 41% year over year. It was about 12.9 billion with a jump to about 18.2 billion. So that's pretty remarkable. That tells me a lot of things, as we'll talk about when we depict the price points a little bit. But you know, the luxury markets or the stronger price points, I think definitely I think was a lot of the story of our closed sales for this year. So Cheyenne, if we can go to the next slide, please. Here we go, quarter by quarter. Quarter one was definitely a strong start, like Mike said. I think the January compared to January 2019, I think those numbers were a little sluggish in 2019, and we definitely had a strong year. So this year we definitely came out of the gate strong, and then you know we hit quarter two, COVID quarter. You know, a lot of interesting things happened around that time. You know, it was funny, for a brief window, we saw a lot of buyers coming out of the woodwork expecting desperation. Maybe they were sensing blood in the water. I know we were seeing a handful of lowball offers, but it wasn't, those didn't last very long. Truth be told, the effects of what we went through were pretty short-lived. And I think it was, you know, all of the 2 months where we felt the effects, but even if you get into the month of May, which for closed sales was us bottoming out, we were down about 50%, I believe. And at that same time, as Mike just said, pending sales were just about up and awash. So we kind of clawed our way back pretty quickly. The important thing about quarter two for me, even though we had some challenges getting some of the deals to the closing table, I think for the most part in the big picture, that was a very, very small percentage. And I think the good news is that most of the transactions were closing in the midst of all that uncertainty, which just once again proves the desirability and the resiliency of our market here in Southwest Florida. And then obviously looking at Q3 to Q4, really it was June on, it was like foot on the gas pedal, and it hasn't let up even till now. It's still kind of running. But yeah, the quarter three and quarter four were pretty remarkable as far as, you know, coming out of what we did, expecting the worst, and just to get back not only to the levels we were, but to kind of surge past that. In October, if you look at the October closings, that was actually our top month. I think we were up 65% year over year from 2019, which is just, it's remarkable. So the quarter two obviously was a big blimp, but fortunately we were able to turn around and recover pretty quickly. Cheyenne, next slide, please. Here's where I like to look at the price point. So if you look at the 0 to 300, it was pretty flat overall. And as you kind of go up in tiers, the 300 to 500 and so on to up to the 2 million, it's kind of a sliding scale, right? So the 3 to 5 was about a 23% increase. The 5 to a million and even the million to 2 million was in the 30%. That was 36 and 38% respectively. It's the 2 million plus that actually is, I think, you know, really grabbing most of our attention. That was up 62.4% year over year. And, you know, that tells me a lot of things, you know, in the midst of what we've been going through, the stock market volatility, you know, real estate just is one of those vehicles and investments that I guess has always proved the test of time and uncertain markets, right? And especially in times of inflation or stock market volatility, real estate does become, you know, an investment of choice, I think. And I think these numbers prove that. People, affluent clientele, are putting money here in the Southwest Florida market, and that just is very encouraging. I mean, that's insulation for one. It just shows that people feel comfortable placing their investments here, and I think even beyond that, it comes down to what this year is for a lot of people: the quality of life. You know, we have the lifestyle. I think people have realized as we're able to work more remotely, maybe it doesn't matter where we live so much. And it's just like, well, let's enjoy life. It's accelerated life plans for some, maybe those that have been thinking about moving down or thinking about retiring. They're like, why wait? Let's do it. And I think these numbers correlate a lot of those feelings out in the marketplace. So pretty encouraging to see. I think we have a lot to carry into this new year, but very pleased with what we see here, especially in the various price points. Next slide, please. The overall closed sales. So this is what I wanted to show you, the single family compared to the condo. I kind of laughed when I saw this, just knowing some of the challenges that we're dealing with that my other colleagues on the panel will discuss here shortly. But at the start of all the pandemic in that March, April, May, we see the sales for single family homes really go up tremendously. And I think that came down to obviously working from home. Just the importance of home ownership kind of took on a new meaning this year, right? Because we spent a lot of time at home. We want to enjoy our space. We maybe need the extra space for the workout room, for the home office, just to have maybe our space and sanity from other family members, whatever the case may be. It has accelerated the desire for buyers to want the single family homes. As you see by the white line here, and as we get into the later months, it's kind of leveled out. And I don't think that's the desire not to want a single family home. I think it's just a reflection of our inventory issues that will be discussed here shortly. People at this point are like, you know what, we'll take what we can get. Let's get in Florida. And I think that's a lot of the reason why that leveled out there. But, we'll kind of see how that looks going forward, but I still expect the single families to kind of have the edge as far as the two go. Next slide, please. I think I have one more. I like this slide. So this is kind of a historic chart going back to 2003, kind of showing the incline before we hit the Great Recession and the whole kind of crash there. And then what we've done, really, slow, modest growth over the years, minus 2015 and 16, where we had some slight downturns. I think 16 was about a 12% downturn for closed sales in Naples. But this to me just paints the big picture of Southwest Florida. The desirability for people to want to be here, once again, that quality of life, the beautiful beaches, the golf, everything that we have here, it's just really attracting people. And I think this just shows the overall growth in our market. And it definitely correlates when you kind of look at this and see how far we've come and with what we understand is on the table and some of the numbers and projects that are currently taking place. I expect these trends to continue. And, as some of my colleagues, not only on the panel, but in the media committee have discussed, we don't have a crystal ball. We use this data to best understand where we might be going. And, there's a lot of reasons to stay optimistic. There's a lot of sustainability. There's equity. The one thing I didn't mention in that $2+ million category, 80% of those were cash sales. And even the $1 million+ category, that was about a 72-73% cash sales. So, we have this insulation, and it's just, to me, I feel like rather than waiting for that other shoe to drop, I'm kind of feeling like this is a transition into a new normal down here for our market, to where, even by comparison, you look at our market compared to others across the country, similar in nature, we're a bargain compared to some of those. So for those of us who feel like, our market's getting carried away, I just don't see that. I see a lot of sustainability. I see high buyer demand. I just don't see this changing overnight. So on that note, I'll leave it there, but closed sales were very strong this year. Definitely expect things to continue as we go into 2021. We do have some challenges, that my colleagues will here be talking about regarding the inventory and pricing, but I will leave that with you. If you guys have any questions, just let us know.
Thank you, Adam. Appreciate that. Next, we're going to discuss closed prices with Bud Husky. Bud, you're up.
Thank you so much, Corey, and good morning, everyone. Appreciate so much your taking time to tune in. So as noted by my colleagues, and we all know, 2020 was such an extraordinary year for real estate sales in Naples, and that also proved true for prices. So the first slide that we have here reflects the growth in median home prices, which for the market was up 11% year over year. Now, That, as for any of us know, that's a pretty significant increase in a median price on an annual basis. But in many respects, it wasn't out of line with what was witnessed on a national basis, because NAR reported that median prices across the country went up actually 12%. In our market, median prices increased far more for single family, and those are some of the comments by Adam and Mike as well about the focus on single family than in condos, though both were well beyond what we would witness in a normal year. Next slide, please. There are a couple of slides I'm throwing in here from that were provided from Florida Association of Realtors, because I think they help tell the story. We, as everyone knows, experienced an enormous increase in sales volume within our market, and as you note, how it compares to other areas of the state. So this is just confirmation of how fortunate we are, and if anything, we have been the beneficiaries of a rather tragic event that's just accelerated real estate across the board. But because our market was up 41% in sales volume that Adam commented on earlier, I find that average prices are really kind of more meaningful in this environment. So if we could go to the next slide. Thank you. So if we look at average close price, the rise is even greater at 16.1%, with less of a variance between single family and condominium in the growth rate. So not only do you look at a 16% increase in average sales prices as being just something that is almost unheard of in real estate, unless there's something that's kind of out of line. But I think that all would agree that an increase of roughly $100,000 in 1 year in an average sales price in a market is quite extraordinary. And that really has a lot to do with the mix of product that was sold as well. Next slide, please. So if we look at the median, back to median close price, but look at it by location, significant gains were experienced across all of our markets. You had single family in the Naples Beach area saw the greatest lift due to really the unprecedented demand for high-end real estate. These are the people that were affluent, they could move quickly, they had the capital, and they took advantage of it. So clearly it accelerated a lot of maybe future purchases. And I know one of the things that is on my mind, and certain with others as well, we have a very strong January, it appears, as far as the level of demand continuing, but one has to wonder what level of demand was pulled forward, and is that going to in any way impact us this year? Too soon to tell. But when you look at that Naples Beach area and you see up 27% is really quite remarkable. Next slide. So if we look at the condominiums, it proved the opposite for condominiums, where other areas of the market saw a greater increase. As was mentioned previously, condo sales were tempered in the first half of the year, but actually came on rather strong in the second half of the year and made up for a lot of lost ground. Next slide. And this also speaks to the comments, kind of reinforce the comments by Mike and Adam. And this is really the difference between the first half and the second half of the year. And this slide reflecting that $1 million plus sales were up 142% in Southwest Florida. The second half of last year is just really quite amazing. And it's always important to distinguish between organic increases in value across the board versus what gains are being driven by the price range of the product being sold. You know, in the prior slide, it showed the median price for Naples Beach was up 27%. Now, no one is suggesting that the average home went up in value 27% this past year, but rather it was an explosion of activity at the highest end of the price spectrum that was noted. And as you can see from this chart, you know, again, this, other than one area, the Panhandle, we had the strongest performance in the second half of the year in the upper end than anywhere else in Florida. And it's interesting to contrast the differences between the Southeast coast versus the Southwest coast, and the level of desirability and the ability to kind of weather the impact of COVID and continue operating. It really speaks to how well the Southwest Florida market fared. Next slide. And so, the last thing is just what can we expect this year? We know that, as Adam said, nobody has a crystal ball, but with a high level of demand that we're currently seeing in inventory levels, as you note here, off 53% year over year. Others will be speaking to inventory in a moment, but there really isn't any reason to suggest that we're not going to continue to see upward pressure on prices. And so the good news from the brokerage standpoint is I fully believe and hope others do as well that we're going to be the beneficiary of not only higher demand this year with great sales activity, but also a higher average sales price that we know is going to compromise affordability, but it's also one of the things that is beneficial to our business. So that's the last one. Thank you, Corey. I'll turn it back over to you.
Thank you very much, Budge. Appreciate it. Now we have inventory and days on market presented by Jeff Jones. Jeff, you are up.
Good morning, everyone. It's a true pleasure to follow these distinguished gentlemen, and especially who we call Mr. Pending, Mike Hughes. It wasn't too long ago when Mike was giving us his farewell speech because he was going to win the Powerball lottery and float off to Tahiti. So I see, Mike, there was just another big lottery last week, and you're still here. So we're really thrilled to have you and look forward to many more years with you. If there's one thing that's kind of a harbinger of possible issues in the future, it's taking a look at our inventory. So let's take a look. We've had some wonderful results in pending sales, closed sales, even though prices have gone up significantly. The lower financing rates have kind of tempered that effect a little bit. But in inventory, we need to be very cautious and careful about what we're seeing. So let's take a look at year-end inventory 2019 versus 2020. So a year ago, we had 7.2 months of supply. This year, we're down to 3.1 months of supply. So we've gone from a balanced, slightly buyer's market to clearly a seller's market. Inventory down 49% overall over last year. Single family homes probably because of their popularity are accentuated here. Last year we had 7.1 months of supply. This year we're down under 3 months to 2.5 months supply. That's a 58% decrease. So obviously the patterns of consumption have shown us that people are migrating to single family homes, and especially larger single family homes to accommodate family and open spaces. So we've seen the single family homes probably take the biggest drop in inventory. However, as we moved on toward the end of the year and single family home inventory became very, very difficult to find options, people want to be here. They want to come down to our market. So we saw an uptick in the demand for condos. Again, we had a very balanced market last year at 7.2 months of supply, pretty healthy. Now we're down under 4 months of supply for condos, down 41%. So a significant drop in inventory, something that we have to be watchful of to make sure that we have choices for people that want to continue to move to the Naples area. Next slide, please. Well, let's take a look at this over 10 years, because sometimes, we look at the immediate situation, but without perspective of the last 10 years. So it wasn't too long ago when we had pretty much a buyer's market. We leveled off to a balanced market in 2014 and 15, and went back up into buyer's market territory, including toward the end of last year, we tended to be much more of a balanced market. But take a look at 2020. We're down to 3 months supply, down 57% over last year. So this is a trend that's we need to be careful of and we need to watch. But one of the things that we keep hearing is that we need more listings. We need more listings. And let's take a look at the next slide, which hopefully will show you that last year was the third highest year in terms of new listings that ended the market. And it was only really 2% below the highest year of 2018. So we are adding listings to the market at a rate that we have historically in the past. And some of the highest numbers of listings have been in the last couple of years, and that was the case in 2020. So clearly, we need more listings, obviously, but we are adding listings into the market at a rate that's pretty much as high as we ever have. So we clearly have a demand side problem. We'd love to have more listings, but the issue is not really a supply side from what we can see in this chart. Next slide, please. So let's take a look at days on market. We're going to start with year over year. Obviously, we have always been in a resort type market. Our days on the market have a tendency to be a little bit higher because we have periods of time when we have quite a bit of focus on buying and sales. And then we have our summer and seasonal month, off-season months that tend to slow down quite a bit. Also, we've always had a little bit of an issue with a good portion of our inventory that's on the market at prices that are really quite a bit above of the market. So that combination has always given us a fairly large days on market count. But take a look at what happened last year. We dropped 10% overall, 10% for single family homes, and 12% for condos. So clearly inventory is coming down, prices are coming down, and for those that were overpriced in the market, and we've seen a trend down in terms of how quickly things can sell. But let's take a look at the next slide, which will show us December 2019 and December 2020, which are snapshots in time, but they also show us the latest trends in how quickly things are selling. So we're down to 77 days overall, down 27% over last year. Single family homes down 24% over last year, and condos down 18% over last year. So we're clearly dropping fairly quickly into much quicker sales, much faster inventory turnover, and that supports our issue that the demand it continues to be very strong and stronger than we are adding new listings into the market. So that's my story on days on market and inventory. We just need to keep our eye on this situation because it is clearly something that could impact the closed sales and pendings as we go into the rest of 2021. Thank you.
Thank you so much, Jeff. We really appreciate the valuable information each panelist has presented us today. Thank you each very much. I've prepared some questions for our panelists to answer regarding the trends in the real estate market. Any of you panelists may answer. Please raise your hand feature and I will call on you. We'll begin with the first question. How did COVID, in your opinion, affect the 2020 market? Adam, go ahead. I think you're muted, so you'll have to unmute.
That's definitely a very loaded question, right? I think there's a lot of things that have emerged as a result of COVID. It's obviously shifted the way we use our homes, the importance of a home, where we can live, the amount of time we're spending at home. So it's definitely had a big impact. And, in light of everything going on, it kind of has been the perfect storm of events that have just aligned real estate to not only thrive, but to post these record numbers across the board. So it's just, I think the one thing to take away is it's just really enhanced the importance of home ownership and what we need in a home. I think those are the two biggest things I can take away from it.
Wonderful. Jeff?
So to add on to what Adam just mentioned, I think we've learned from COVID that we can pretty much work from anywhere. The attachment to a workplace has certainly diminished quite a bit, and people have realized that they can migrate to open spaces, have better family connections, and that has driven a tremendous migration to our area.
Great thought. Mike?
The thing that jumps out at me is how fast the market can turn on you. And if you think about it, at the start of 2020, we had no idea that this virus out in China was going to impact our market. I mean, you couldn't see that one coming. And then literally within 2.5 months, the market turned on a dime. And so even every one of us on the panel, we all kind of feel the same way, is that you get this idea of where the market's going, but every now and then you get a surprise. And certainly, 100-year event is a huge surprise. But on the positive side, another one of the surprises was how well our industry adapted. I mean, really, it didn't take long for all of a sudden our real estate agents to start kicking in and start selling more. And the resilience of the industry was absolutely phenomenal. And kudos to really the entire NABOR membership. I mean, really, in one of the biggest challenges that I've seen in my lifetime, the industry came through in spades. We learned new marketing techniques. That was very helpful. But it's all it every year has challenges. I mean, and I've said this over and over. Every year we start the year, and there's going to be unique challenges for that year. What really defines us is how you handle those challenges. And frankly, I think the membership did a great job in 2020. We're going to have new challenges in 2021. So very pleased with how resilient our market is.
Great, thank you. Budge?
Certainly agree with Mike's comments and others. I mean, the resilience of the brokerage business and the ability to quickly pivot and adopt was evident in this past year. I think one of the things that just the impact of COVID, and it's the underlying theme throughout everything, is kind of this psychological behavioral impact that it had on people, because, faced with such an event and potential loss, all of a sudden the idea, I think, for many, of having money tied up in things that they couldn't enjoy and didn't directly impact their life at present, all of a sudden caused them to say, what am I doing? And there's a lot of people we know, particularly in a resort second home market like this. We see the performance of our market versus many others in the state and across the country. It's those people that for years have said, well, one day I'll do this. And that day arrived. And I think that there is while there is the immediacy of those decisions and the acceleration of life decisions and investments in real estate accordingly, I do believe that these have lasting impacts, and that COVID is going to continue to cause people to really rethink their priorities in life and reestablish those. And for a lot of people, it's going to be, well, my priority is being with my family in a beautiful place that we can call home. And that to me is far more important than an additional more money or return in some kind of other investment.
Great thoughts. Thank you all. Mike?
Yeah, one other thought. If you think back to March and April, when our numbers were plummeting, one of the things we saw was how America dealt with fear. Because back in March and April, you couldn't find anything to protect yourself. You couldn't find gloves, you couldn't find masks, you couldn't find disinfectant wet wipes. And we also had very little data to go on. You were hearing bits and pieces about hospitals and respirators and all that. So it was hard to grapple with your fear. I mean, as a parent, I'm dealing with, how do I protect my family? And our buyers were dealing with the same fears. And then as the months went on, the supply chains loosened up. And so supplies became readily available. And then also America digested what was going on with the pandemic. And many of them made decisions that, along the lines of, if we're in this thing, all of a sudden Southwest Florida is more appealing. And the pandemic did not hold back the buyers. And Jeff made a very great point. And that is that the inventory of listings coming on the market hasn't plummeted. It's just the demand is so much stronger. And Jeff, that was a great point. And that's something that we will be grappling with all of 2021 is the supply and demand. And Budge hit another aspect of that, and that was the pricing. And so under the economic principle of supply and demand, when you have strong demand and supply can't keep up with that demand, it has to have an upward pressure on pricing. So, this COVID was not just a 2020 story. Different aspects of it will definitely weigh on our market in 2021.
Thank you. Jeff?
So it's hard to leave this topic without the mention of the efforts from Florida Realtors to make sure we were named as essential services going into the pandemic so that we could operate freely with caution in the market. And that helped us tremendously. There were many realtors in other states that were on lockdown. And really, we have to be thankful to our governor and our Tallahassee lobbyists to make sure that we were named essential services and we could function freely during a difficult time.
Great. Thank you so much. That's a very important point, Jeff. Thank you. We'll move on to the next question. Where did the bulk of real estate activity take place during 2020? All right, Budge, you're up.
Yeah, I mean, let's face it, this was, thank you. It was a broad brush. So, I mean, it seemed that every aspect or sector of the market benefited from it. But as noted throughout the various comments today, it just is pretty clear. The higher the price, the higher the increase in the percentage growth in sales year over year. And so, the whole aspect of the Naples Beach market, upscale real estate, simply was on fire. And this is true not only in this market, it is true in other markets as well, and particularly the beneficiaries being the second and resort home markets. And there's areas of the country where inventory has languished, quite frankly, for 2, 3, 4 years on the market, and all of a sudden it was flying off the shelf, unlike anything anyone had seen before. So while the base of the market was strong, and hopefully that continues, the high end was really, really exceptional.
Great, thank you, Budge. Jeff, you're up.
So I think we have to give single family homes the nod for the highest demand and most high performing sector of the market. Clearly, people were looking for wide open spaces. And I believe that really it's new construction that saved us from a complete inventory meltdown. There was a lot of new construction homes added to the market. And if you go out into Golden Gate Estates, you'll see tremendous demand for still modestly priced single family homes in wide open spaces. So I think that aspect dominated the market for the majority of the year. And then as inventory began to get much shorter, people, I think, trended back toward condos because they wanted to be here.
Great, thank you. Adam, you're up.
Yeah, just to kind of reiterate, I think this year, people prioritize happiness and well-being over anything. And, yes, the Naples Beach, the water access type stuff has definitely been, one of the hottest sectors. Or on the flip side, the 34120 Golden Gate Estates area, probably from a closed sales standpoint, has shown some of the highest growth. I think they had, up almost 31% year over year. So, it's a combination of the two. Do you want more elbow room and space and privacy, or do you want to be close to the beach? And, I guess he chooses their own, right? On that note, Jeff mentioned the new construction, and I wanted to bring that up briefly because that's something that's always very much accounted for in our marketplace. I mean, the truth is we only get a fractional of, the closed or pending MLS data for new construction. I like to call it the ghost data, but it's also a very powerful sector in our market. And had we not been able to lean on that, we would have been far worse in regards to inventory this year than we were. And I know a lot of builders in town are having had record years. And that's just something we don't, unfortunately, have a tangible number for. And on that note, I know with the MLS, we have a added comp feature. in which if you have any new construction sales, you can actually import it, just the basic information into the MLS. So that way, A, you can get the MLS credit for your sale, but B, there's a little bit more data available to us other realtors when we're perhaps doing comps down the road. So I did want to point that out as well.
Thank you, Adam. Mike.
Yeah, another interesting thing that I noticed was we were getting East Coast Floridian buyers out in the Ave Maria area. And you would think that they were leaving the East Coast because of the high density. Well, they kind of were, but they actually moved to the Ave Maria area and became commuters. And that surprised me a little bit. You don't realize, the time it takes to drive from that area to the East Coast. A lot of them said, you know what, when you live on the East Coast, you're bogged down in that rush hour traffic, and it's really, not that bad. And so that's something that that I did notice, and it surprised me a little bit.
Interesting. Thank you, Mike. Budge.
Just to follow up to Mike's comment, because it's an appropriate one, and he's right. I mean, the migration from the East Coast of Florida was really something that we had not seen at this level before. But the other thing that I think in terms of kind of this disruptions in normal kind of feeder patterns, and this is true of Naples all the way up through Sarasota and tracking it, is that we began to see this migration of people from Western states. We always know we've had the traditional Midwestern, then increasing number of people from the Northeast, but we were starting to see customers from Texas, from Arizona, from Alaska, Washington State, California, and those to a level that I certainly have never witnessed before.
Great point. Thank you. All right. This, I know you've answered a little bit of this before, but thinking back, what do you think stood out in the housing market in 2020? What's one thing that really stood out in your mind? Budge, back to you.
I'm going to maybe go to what maybe the others would say or not say, but I'm not going to focus on COVID. I think what stood out for me in the housing market in 2020 was the first quarter, because ultimately we're trying to figure out what normal should be. And if we look at the first quarter, the performance, the increase, I think that was noted, it was like 21% up in the first quarter versus the prior year. That was a level of activity not witnessed in most other markets in the state, or quite frankly, the country. So we already had this, we were off to the races last year before COVID hit. And so I feel even more bullish that once we are over this, we were witnessing a level of desirability to demand that wasn't necessarily artificial or accelerated. It was already there, and I anticipate it to continue.
Great. Thank you, Budge. Jeff?
So I think what we can conclude at the end of the year is that our area outperformed pretty much everywhere in the state, for sure, and in many areas of the country, in terms of our desirability for overall living, quality of living. And I think, as Adam pointed out, our priorities shifted to family and our health versus performance on the job. So I think that our area clearly outperformed the rest of the state in terms of our desirability. And I think that was a great realization.
Thank you, Jeff. Mike?
One of the things that I'll come at this from a different angle. It's very interesting to see how the real estate market intertwines with the local economy. I mean, if we read the headline story in the Naples Daily News on Sunday, it was talking about the furniture stores are struggling to keep up with the demand for furniture, and that some of them are backed up to 6 months to deliver furniture. And really, when you see the crush of sales that we're doing, it's no surprise that the furniture stores are getting their share of the business. And that's just one industry. So when real estate thrives in the area, it really has a ripple effect through the whole local economy that's very positive. And so it's kind of I've always known that real estate was one of the driving forces for the local economy, but we certainly saw it in 2020.
Thank you, Mike. Jeff, was that your hand or did I miss that?
No,
Okay. All right, Adam, you're up.
all right.
I think this year for me is just another reminder of, how resilient our market can be. I mean, from the hurricanes we deal with, Irma, Wilma back in 05, the BP oil spill, defective drywall, the red tide, the algae blooms, and obviously throw in a global pandemic. I mean, we've definitely had our challenges over the years, and it's easy in those moments to be overtaken by it and think the worst. And every time not to say we didn't have our challenges, but we thrive through it, we persevere, and we still progress forward as a market. And it's just, I don't know, I find myself feeling very appreciative to be here in Southwest Florida and do what we do. And I think this year is just another testament to our market and what it's about here.
Great, thank you, Adam. All right, the final question is of my prepared questions. What advice can you give to home buyers and sellers in this market? All right, Mike, looks like you're up.
A couple things here. Obviously, with a tight inventory, if you're a home buyer, you have to be prepared to move quickly. You don't have a week to think about it. In all likelihood, if you find a desirable property, it's highly likely there are others that are looking at that exact same property. Multiple offers are here right now, and they're not rare. In fact, we're seeing more and more of them. So going in with a low ball offer, your strategy, the timing is horrible. So I would go in with a realistic offer. We are seeing a number of deals close above list price. And certainly if you're a cash buyer, that probably helps your offer when it's being compared against other offers on the same property. Now, if you're a seller with a tight inventory and you haven't listed your property for sale yet, your timing is wonderful. And so the people that haven't listed yet, you're the ones we're trying to find. Really, timing is everything. And I suspect with the demand that we're seeing right now, that the demand's going to stay strong for a while. But, things can change the market. And a lot of things that can change the market you don't see coming. As Adam pointed out it was almost a horror story of Chinese drywall and BP oil spill and the two hurricanes. Those kind of things really you don't see coming. They just kind of get dropped in your lap and the market could change. And the one interesting thing that could happen, I'm not saying it will, but depending on how the new regime up in Washington, depending on what they do, you don't know the impact that's going to have on the stock market. Right now, the stock market's at an all-time or near an all-time high. And if all of a sudden, money rolled out of the stock market, where do you think it's going to go? It's highly likely it's going to be looking at real estate. So, these are exciting times. Certainly, if you're a home buyer or a seller, talking with your local realtor makes a lot of sense. They've seen a lot. They've seen a lot of different markets, and bottom line is we're here to help.
Thank you, Mike. Jeff?
So if there was ever a better time to have a relationship with a realtor to help you manage your expectations in this market, there's probably never been one. We have issues with appraisals, we have issues with prices on the rise, and we have an issue with demand going down. So there's never been a better time to work with a realtor to help understand the market that we're in, help understand your needs and wants, and help manage your expectations about how best to make an offer and how best to proceed through a contract.
Great, thank you, Jeff. All right, I have, looks like we've got a little bit of time left, and I have some questions that came in the Q&A. So I'm going to move through some of these. This is sort of a crystal ball question, so everybody get out your crystal balls. Are we potentially having sales now with low interest rates and potentially facing a significant reduction in sales in future years when interest rates may rise? So again, anybody want to look in their crystal ball and tell me what you see? Adam, go ahead.
For me, I think the two challenges out in front of us is really the inventory, right? I think we're going to be, there's a lot of projections to estimate that our closed sales should even be, on top of what 2020 was. But, I think we're handcuffed by the inventory. So that's going to be number one there. And yeah, there are concerns that as the rates rise, it will maybe soften the demand a little bit. But I mean, I think from what I can gather in my crystal ball, I mean, rates should stay pretty competitive through most of the year. And even in the midst of record low interest rates, I saw a question here about, how many of this total closed sales were cash. And that number is just under 50%. It was like 49.2%, which is pretty remarkable in the midst of record low interest rates. So, to me, that just shows, once again, the insulation that we have in the underlying elements of our market.
Thank you, Adam. Budge?
Yeah, I would agree. I mean, I think many of us view the year as inventory being the governor on how fast we can go. And so it is an overarching concern. I don't foresee, and I think hopefully agree with most economists, don't see anything that's going to significantly relate to inflationary pressures, which would lead to an increase in overall rates. The Fed is being about as aggressive as it can in terms of fiscal and monetary policy. We're going to continue to see essentially zero rates for quite some time. So the 10 years are not going to be under much pressure. If rates rise slightly, it's not going to be an impediment. And quite frankly, the increase from a slight rise in interest rates is not going to be as great as the increase in the monthly payment driven by just the appreciation of average prices.
Great. Thank you, Budge. Jeff?
Well, the question is, are we borrowing from the future? And, underlying, we have a change in the market, and that people's priorities have changed. They learned they can work from anywhere in most cases. They've learned that this is an excellent way to dedicate more time to family and relationships. And so I'm not sure that we're borrowing from the future. I think we're seeing a long-term trend in the demand for real estate and where people want to live.
Thanks. Mike?
I'm not overly worried about interest rates. I remember the first loan that I ever obtained when I bought my first home, and I had a loan for 9.8%. And I thought I killed it. I got one under 10%. I was so happy with that. So when we're talking rates in the threes, even if they inched up into the fours, historically, that's very good. Now, one thing, and Adam brought up an interesting point, and that is that cash versus financing is kind of evenly split. Don't be surprised if that starts changing. Because if we get into a tight inventory and multiple offers on many of these properties, more and more of these cash offers are going to be accepted versus financing. So I'm anxious to see whether we stay at 50-50 or whether that changes. But I just want to reiterate what the others are saying. Inventory is going to be, and I'll borrow Budge's word, is going to be the governor on how well we do this year. I mean, really, the demand is there. I see the demand staying strong for a while because the one thing that is still out there, we have a huge baby boomer generation that's coming up on retirement. And so as many of them are approaching the retirement years, a lot of them have eyes towards Florida and Southwest Florida in particular. So I think we're heading into an interesting period, but certainly inventory will be the challenge this year.
Great. Thank you, Mike. All right. I'm going to move on to another question here in the Q&A box. I have some thoughts about this, but I wanted to hear from our panel as well. What is holding back sellers from putting their homes on the market now?
Madam President, why don't you go ahead and comment then?
Budge, why, thank you. Well, food for thought is, I think a lot of people are thinking, where am I going to go? I mean, I'm living in Southwest Florida, and most people are in a beautiful place. So, what am I going to do? Am I going to move to a condo on the beach? Am I looking for more space? So I think to quote some of you earlier, setting expectations and doing some objection handling are great skills that we can all brush up on. So I'll close that there. Thank you, Budge. Adam, you're up.
I heard an interesting term the other day, right? We all know the word snowbird. I'm now hearing sunbird, right? Where, people are actually maintaining full-time residency most of the time here, yet escaping the hot summer months to go get reprieve, whether it's up in the mountains or various places across the country. So I think the home base, from not only the lifestyle advantages, the tax advantages, no state income tax, it just strategically makes sense for people to come here and then make the part-time thing elsewhere. So I think you're seeing a shift with how people are living here in Southwest Florida. And I remember we were talking about it in our committee meeting where, it's not as transient second home anymore as it is full-time end users. And I think that is part of the reason for we're not seeing as many for sale homes at this point in time too.
Great point, Adam. Anybody else? All right. There's a few other questions in here, some value, some cash. I'm going to have our team do some research on some of these, and we'll make sure to get the answers to these posted at the end. Any final thoughts from our panelists before I close out this wonderful session today? Yes, Mike, go ahead.
This is an off-the-cuff comment, but Corey, you're doing a great job as president. I think you did a wonderful job moderating this group, and been looking forward for several years to seeing you as president. And certainly, we're going to do our best to make sure we have a good year for you.
Awesome. Well, thank you so much. I appreciate, it's easy when y'all are out there turning and burning. So thank you very much for the kind words. Well, this concludes our question and answer section of the 2020 Year-End Naples Real Estate Market Conference. Now for an important announcement. The statistics, charts, and infographics will be posted on naplesarea.com under the Market Statistics tab for your reference. We will also be posting this video of the conference on nabor.com, which includes the slides. Please feel free to share this information with your associates and your customers. I just wanted to do a quick plug. A lot of you saw some of the slides that Budge used, and those actually were presented to some of us at a Florida Realtors conference that actually Mike, one of our panelists, hosted last week. And Brad O'Connor, who is the chief economist for Florida Realtors, is going to be our guest speaker at our member business meeting, which is going to be Thursday, February 25th. So I hope that you zoom in for that. Thank you again to our panelists, Mike, Adam, Budge, and Jeff. And thank you to everyone for watching. We hope that you found this information valuable, especially during these challenging times. My sincere best wishes to all of you for a very successful year ahead, and have a wonderful day. Thank you very much.
Thank you.
Guys.